Bitcoin, presently the leading and largest cryptocurrency based on market capitalization, boasts a finite supply. However, the question remains: how many Bitcoins are still available for new miners to obtain? What is Bitcoin? Bitcoin (BTC), hailed as the king of crypto, made its debut in 2009 as the pioneering cryptocurrency, crafted by the mysterious figure known as Satoshi Nakamoto. Operating as a decentralized, peer-to-peer digital currency and financial platform, Bitcoin utilizes cryptographic methods to authenticate and safeguard transactions while generating new units. Bitcoin encompasses two main components: the overarching idea and structure, which include the decentralized digital currency, foundational technology, user community, and expansive ecosystem, and the individual units of the cryptocurrency BTC. It's crucial to distinguish between the broader concept of Bitcoin and the specific quantities of the cryptocurrency. History of Bitcoin. As the inaugural cryptocurrency, Bitcoin predates most crypto exchanges. Its first recorded exchange transpired on the Bitcoin Talk Forum in 2009, where two users swapped 5,050 BTC for $5.02 via PayPal, setting the exchange rate at $0.00099. The value of Bitcoin surged to $1 in 2011 as more investors embraced it. Subsequently, its value skyrocketed, reaching $10 within months and peaking at nearly $30 in the same year. Though 2012 saw relatively subdued activity for BTC, 2013 witnessed a remarkable surge, with its price climbing to $250 in April and surpassing $1,000 by December. While subsequent years presented some turbulence for Bitcoin, 2017 marked widespread adoption and a record high price of $19,345.49. However, it was in 2021 that Bitcoin achieved unprecedented highs, peaking at $68,789.63 in November, coinciding with the public listing of the popular crypto exchange Coinbase. Despite its moniker as the king of crypto, Bitcoin encountered challenges during the crypto winter of 2022, experiencing a steady decline from around $50,000 in January to under $20,000 by December. How many Bitcoins are there? Bitcoin's total supply is capped at 21 million BTC. According to Ray Dillinger, an early Bitcoin code reviewer, Nakamoto intentionally imposed this supply limit to ensure that even the smallest fraction of Bitcoin would retain a value of less than 1 cent, guaranteeing ample divisibility for it to function as the primary global currency. Dillinger, in correspondence with Bitcoin developer Mike Hearn, elaborated, "If Bitcoin remains a small niche, it'll be worth less per unit than existing currencies. If you imagine it being used for some fraction of world commerce, then there's only going to be 21 million coins for the whole world, so it would be worth much more per unit." As of January 2024, approximately 19.6 million BTC were in circulation, leaving around 1.4 million BTC yet to be mined. On average, new Bitcoins enter circulation every 10 minutes, coinciding with the creation of a new block on the Bitcoin blockchain. The number of Bitcoins generated per block halves after every 210,000 blocks, approximately every 4 years, thereby reducing the rate of token issuance. At its inception, the block reward for Bitcoin was 50 BTC. After 210,000 blocks, the reward halved to 25 BTC in November 2012. Following another 420,000 blocks, the reward decreased to 12.5 BTC in July 2016. During the most recent Bitcoin halving event in May 2020, the reward was further reduced to 6.25 BTC. The next halving, anticipated in April 2024, will have the mining reward to 3.125 BTC. What occurs when Bitcoin reaches its maximum supply? Bitcoin is projected to reach its maximum supply by 2140, at which juncture miners will cease receiving new tokens as rewards, and the value will be solely dictated by supply and demand. As outlined in the Bitcoin white paper, miners will still have an incentive to authenticate transactions and safeguard the network, as they will continue to receive transaction fees post-block verification. Some speculate that Bitcoin's value will escalate once it reaches its maximum supply, resulting in higher transaction fees per block. However, there's also the prospect that Bitcoin mining could become economically unfeasible sans block rewards. It's important to note that future adjustments to the supply cap are plausible, such as altering the maximum cap, potentially doubling it to 42 million, or implementing a redenomination to adjust the supply. Nevertheless, any such modifications would necessitate consensus among the majority of the Bitcoin mining network. Conclusion: delving into Bitcoin's total supply elucidates its design and functionality. The gradual release of new Bitcoins, occurring approximately every 10 minutes through block creation on the blockchain, is a deliberate and systematic process. The programmed reduction of Bitcoins minted per block by 50% after 210,000 blocks, or roughly 4 years, introduces a compelling aspect of scarcity to this digital currency. Comprehending the intricacies of Bitcoin's supply mechanism contributes to a holistic understanding of its economic model and long-term viability as we navigate the realm of cryptocurrencies.